This is CA Reshma Jain. I have earlier released a part 1 on salaries for CA Intermediate May 2025. Now this is part 2 in relation to salaries. Okay, so let's begin. Profit in lieu of salary. Any compensation we are receiving from employer before our employment or after termination of employment will be taxable as profit in lieu of salary. See, for example, compensation on account of termination of employment will be profit in lieu of salary. Compensation on account of modification of terms and conditions of employment will also be profit in lieu of salary. Any sum which is connected to employment and the employer is paying to the employee will be profit in lieu of salary. Anything which is unconnected with employment, such payment is not profit in lieu of salary. Payment from provident fund or other fund to the employee other than gratuity, pension, compensation received by workmen under Industrial Dispute Act, Provident Fund, Public Provident Fund, RPF, Superannuation Fund, House Rent Allowance. So any other fund received by employee from the employer apart from employee's contribution or interest on such contributions, then such will be treated as profit in lieu of salary. Now we have already seen, right, in case of URPF, what happens in URPF is the employee's contribution and interest will be taken as salaries at the time when the fund is received. An employee's contribution is not chargeable to tax, neither deduction or exemption is allowed. An employee's interest on employee's contribution will be taken as income from other sources. Any amount received under Keyman insurance policy is also profit in lieu of salary. Any lump sum payment or otherwise received during joining the employment or cessation of the employment is also profit in lieu of salary. Retrenchment. Now it's the retrenchment compensation. Compensation paid under Industrial Disputes Act. So here, see, any compensation received would be exempt, would be taxable as profit in lieu of salary, we just now saw, right, from the employer to the employee. Now in case of profit compensation received under Industrial Disputes Act, what will happen? We will get some exemption. What is the exemption? 15 days salary, 15 days of salary into completed years of service or part thereof in excess of 6 months. So we have to round off in excess of 6 months, and 15 days salary or 5 lakh, whichever is lower, will be taken as exemption. Now what is average pay? Average pay will be taken based on 3 months. If they are given monthly payment, 3 months of average. Weekly payment is given 4 calendar weeks, average of 4 calendar weeks. If daily is given, 12 full working weeks. Okay. Preceding the date on which average pay becomes payable. Okay, what all wages will include? Wages shall include all the allowances including DA, value of house accommodations or supply of light, water, medical attendance or MNT or any other service of concessional supply of food grains or other articles, any travel concession or any commission payable on the sales. However, it will not include bonus, contribution to retirement benefit scheme, gratuity payable on the termination of service. So it will be available for both old tax and new tax regime. So let's revise this again. 15 days of average pay. Average pay, if monthly is given 3 months of average pay, weekly is given 4 calendar weeks, daily paid workman, average pay of 12 full weeks will be taken, and taking that average pay, 15 days average pay, we should multiply completed years of service, and part of service should in excess of 6 months should be taken. An amount less and 5 lakh, whichever is less, will be taken as exemption under this section. Voluntary retirement receipts. Voluntary retirement receipts. Voluntary retirement receipts is also chargeable and taxable as profit in lieu of salary. So who are all eligible employees for the exemption under this clause? Public sector undertaking, any other company, public sector, any other company, any authority established under central or state provisional act, local authority, cooperative society, university established or incorporated under state, central, state or provisional act, or institution declared to be a university by University Grants Commission, Indian Institute of Technology, such institute of management as central government may notify in the official gazette, state government, central government, institution having importance throughout India in any state or states as central government may specify by the notification. So all these undertakings, the employees of all these undertakings, public sector, any company or any establishments of government, then they will be eligible for exemption. The maximum limit will be 5 lakh. So when we are calculating this, we have to keep the threshold as 5 lakh. So what will be the exemption amount? The exemption amount will be VRS, lower of 3 months of average salary not 3 months average salary, 3 months salary into number of completed year of service, fraction should be ignored, salary per month into number of remaining months of service, remaining years or months of service, remaining, if it is years then convert into months because salary per month is given, actual amount received of 5 lakh whichever is lower will be given as exemption. What is salary? Salary will be basic plus DA in terms plus turnover commission. Okay, see it's given here, amount equivalent to 3 months salary for each completed years of service. Salary at time of retirement into balance month of service or 5 lakh or actual amount received, whichever is lower. See, actual amount receivable shall not exceed. So amount receivable will be compared to this. Okay, let's do the sum. And one more thing is, for this to be taxed, voluntary retirement exemption, the employee must have completed 10 years of service or must have completed at least 40 years of age. Okay, so 3 months of salary for completed years of service, salary at the time of retirement into balance months of service, amount received or 5 lakh whichever is lower. Suppose voluntary retirement scheme is received one time in an assessment year, it cannot be exempt then afterwards again. If 89 benefit is taken, then again 10cc benefit, 1010c benefit will not be eligible, and it can be opted by both old tax and new tax regime. Now your voluntary retirement scheme, okay, compensation of 7 lakh is received after 30 years of 4 months of service. So you should have completed at least 10 years of service or 40 years of age. So in this case he has completed 10 years of service. So how much is completed years of service? 30 years and 4 months of service. Completed years of service fraction to be ignored. So his completed years of service will be 30 years. He still has 6 years of service left. Here balance months of service left before the date of retirement. At the time of voluntary retirement, he is drawing basic salary of 20,000, DA forming part 5,000. Compute his taxable voluntary retirement compensation. He is not claiming relief under section 89, so he will be eligible for the deduction under section 1010. Sorry, 1010C. Yes, 1010C. Voluntary retirement compensation. Now exemption is compensation actually received, statutory limit 3 months of completed years of service, basic plus DA, 3 months into 30 years, fraction ignored, last drawn salary into remaining months of service. Whatever is lower will be the exemption. Now perquisites. Perquisite is some extra benefit in addition to what amount that may be legally due by way of contract of service rendered. So there will be some extra benefit given to the employee. Such benefit is called perquisite. May be cash or in kind. Reimbursement of expenses is not a perquisite. And for perquisite to be in the nature of perquisite, it should be employer-employee relationship. Perquisite can also be in the course of profession. If it is employer-employee relationship, it will be taxable under the head salary. If it is in the nature of profession, it will be taxable under the head PGBP. Perquisite will be taxable only if it has legal origin. Any unauthorized advantage taken by the employee without his employer's sanction cannot be considered as a perquisite. Suppose an employee A is living in a house of the employer. Now what happened is he is evicted by the employer. Evicted by the question arises is, but he has terminated his service, but he continues to occupy the house without the permission of the employer for 6 more months. Now this 6 months period he has stayed in the house which is not authorized by the employer. Now is this perquisite? Is this considered as perquisite? No, it is, because it does not have any legal origin. So, but how will it be taxed? He has stayed, right? It will be taxed as income from other sources. Now, types of perquisite. Perquisite which are taxable in case of all employees. Tax-free perquisite is in case of all employees. Perquisite taxable only in case of specified employees. Let's start with exemption in case of leave travel concessions. What is leave travel concessions? The employer may pay for the leave of their employee who can go for leave either on leave or after retirement of service or after the termination of service. Exemption will be granted only if it is old regime. It is not available for the new regime. And the benefit is available to both citizens as well as non-citizens, to self, spouse and children, plus father, mother, brothers, sisters if they are dependent. Limit of exemptions will be amount actually spent subject to rule to be. What is rule to be? We'll see. An exemption will be allowable for 2 journeys performed in a block of 4 calendar years starting from 1986. So starting from 1986 we have to see 2 block of calendar years, two journeys in a block of 4 calendar years. So 2 journeys will be allowed in a block of 4 calendar years. Suppose if we have not performed any journey in a particular block, it can be carried forward. One such journey can be carried forward to the immediately succeeding block of 4 calendars. So next block of 4 calendars we'll get the benefit of 3 journeys, exemption of 3 journeys. Now suppose employee does not avail any LTC for the block 18 to 21. So what will happen? One such unavailed LTC will be carried forward to 20 to 25. So if he has taken one journey, what will happen? In such, it will be considered as it is taken for 18 to 21, and still 2 more journeys can be performed in 22 to 25 block. What are the monetary limits as per rule? Suppose, see, if it is traveling by air economic fare, the amount should not exceed the air economic fare. In other words, air economic fare or actual amount received, whichever is lower, by any other mode. If rail service is available, amount not exceeding the air conditioned first class rail fare to the shortest route place of destination. Shortest route should be taken into consideration. where railway service is not available. Then, if there is recognized public transport system, then first class of such deal or deluxe class fare of the shortest route fare will be taken into consideration. If there is no public transport system exists, we should assume that it has been performed by rail, and first class rail fare of the similar distance of the shortest route will be taken into account. So we have to compare which these amounts and actual amount, whichever is lower, will be taken into account for exemptions. For children, only two child born after 1 October 1998, only two children will be allowed. Before 1st October 1998, there is no restriction, and multiple births after one child. Suppose first child is born as single, second time twins are born, then also for these three it will be allowed. But first itself twins are born and second one single child is born, then only for twins the exemption will be allowed.